reverse mortgage. Reverse mortgage, when you say, it is the opposite of the housing loan. In the housing loan, what we see, common trend, we have the bank manager and we have the borrower. Two parties, they meet together and they have the agreement that as a borrower of the housing loan, I'm going to borrow the loan from the bank for the construction of the house or villas, and I'm going to repay on equated monthly installment. EMI scheme will be there, no? So I am going to pay every month so much along with the interest, and also some portion of the principal also I am going to pay. Why most of the people will go for housing loan? Because you are all professors, you all well know that we are going to construct the house because we are going to get the concession, or we are going to get the exemption for whatever the interest that we are going to pay under the Income Tax Act. So that being the case, we see that roti, kapda, makan. So these are the three very big words that makes lot of noise in the Commonwealth when he wants to live a comfortable line. Roti, food. He requires food always, isn't it? Whatever the thing, whatever the work you do or you don't do, you require water, you require the food for 3 times a day. Roti, kapda, you are going to wear the garments, isn't it? Because you want to cover the body, your body from the nature. Sunshine will be there, heavy rainfall is going to be there, or cold wind is going to be there. So we want to protect ourselves. So roti, kapda. Last one is makan. Makan everyone wants. Even a particular animal that is going to be there in the forest, wild animal, they will go and sleep in a particular cave which is being identified by them. So this being the case, as a social being, as a person whose mind or the brain is well developed and we know what is good and what is bad, we are going to construct our own house. It is not only constructing our own house. Sometimes what happens, the parents are going to construct the house, whereas the son or the daughter is going to live in that particular house. That may be the case because you want to construct the house after your retirement. Say, for example, after 60 years, you want to construct. But afterwards, we will be there for 10 or 15 years as the case may be. Then what happens? Immediately our successors in the form of the son or the family members, they are going to enjoy that particular property. Why I am telling all these things is because these are the basic things that we are going to look into as the necessaries of life. Why it is considered as necessaries of life? Because food, health, and the garments, that is clothing, and the shelter in the form of the housing that is being required by each and every person. Now, the opposite of that is the reverse mortgage. You see how the reverse mortgage has taken its own time for the purpose of evolving itself in the today's economy. In the 1970, what was the thing? In 1988, what? And after a gap of 8 years, 1996, what was the development that has taken place in the field of the reverse mortgage in America? Why we look at America? Because we see that most of the European countries and American countries, they have a different sentiments towards the life. Because you speak about that you marry and you settle with your wife and the children for a very long period in a in a Asian country. Say, for example, India, Pakistan, Bangladesh, Sri Lanka. You see, you live with your wife for a very long period. But in America, it is not like that. Divorce are very common in America because there is a concept called the living relationship. So as you are going to be benefited, you want to stay with a girl and with a partner, then you are going to stay with her. The moment you think that you want to break the relationship, you can say that you don't want to be there with that particular partner. So this being the case, you see a lot of cultural differences are there when we compare with the American countries or the European countries. The National Council of the Aging is going to tell us that what is the aging population in the Asian country, what is the aging population in China, what is the aging population in America, what is the aging population in Europe. Like that we are going to calculate. So they say that feasibility studies to determine the merits of a federally insured home equity conversion mortgage. So you do not want to give away whatever the property that you have inherited or whatever the property you acquired during your lifetime because of your earning, you don't want to give it to you because you have to lead a very comfortable life. You do not want to lead a very what we say miserable life at the end, giving all the assets for the your son or the daughter. In the 1988, the president of the United States he signed into a law the federal home equity conversion mortgage insurance plan. It is called as the federal home equity conversion mortgage insurance plan, where a lot of concessions and the exemptions are being given for the senior citizens of the country. That was first introduced in the America. So we consider it as offering senior Americans the first FHA, that is Federal Housing Advance. In the 1996, you see the development has taken place where reverse mortgage. Wall Street Journal states that they anticipate 16 million households to apply for reverse mortgages in 2010. This is a very old data, 10 years data. At that particular time only, the American government estimated at the Federal Bank of America that they are going to expect 1.6 crores of the people who are going to apply for the reverse mortgage. In India, if you compare for this, not even 16 lakhs, not even 16,000 people, they go for the reverse mortgage because we have a different cultural background. So we are going to take into consideration as to how the thing is, what is the reverse mortgage. The reverse mortgage loan was introduced in India 10 years back to improve the life of house owning senior citizens. Why it was introduced long back in 2007 only? RML is a loan that enables them to meet their day-to-day expenses pertaining to food, medicine, and repair of the house. So you see that they are going to take the loan on a phased manner. Not once for all the loan is going to be given in the reverse mortgage loan. It is going to be given in the form of the expenses pertaining to food, medicine, and repair of the house can be done with the help of the mortgage. Minimum age of availing the RML, minimum age of availing the RML is 60 years, irrespective of the gender difference. And if a couple seeks a joint loan, then age limit for the spouse is 55 years or above, they are going to tell. And the applicant must have his or own purchased house as RML, because the housing loan, you can say that the reverse mortgage loan is available only out of what the property that you have got. So it cannot be secured against ancestors' property. There are various factors on which banks and other financial institutions assess the value of property, but its minimum residential should not be less than 20 years. So the age of the house should not be less than 20 years, they are going to say. Why? Because as the aging advances relating to the houses, you see whatever the reverse mortgage loan that you are going to get from the bank is going to reduce. You are not going to get much more when the house is more than 30 years or 35 years old asset. We see that this particular thing is going to be very important, whereas the individual RML plan, you see, whereas the individual plan you take into consideration that this particular thing will apply when you say that the interest is going to be very, very nominal also, the interest rate that is going to be charged, and it is not going to be much more. And you see that presently 50,000 rupees is the limit. This is very old data. When we started with in the American context, they used to give 50,000. 50,000 is a peanut nowadays. So we don't take that much now it has increased like anything. The ceiling limit has increased like anything. What is the concept of mortgage, reverse mortgage? If you understand, the reverse mortgage is precisely the opposite of the home loan scheme. Under reverse mortgage, the borrower receives money in installments, which is paid in full later on. So in what happens in the loan, when you are going to take, you apply for 25 lakh rupees loan for the purpose of constructing the house. The bank manager will not give 25 lakh rupees to you. He will give it in a phased manner. Say, for example, in the base, when you want to put the base for your foundation for your building, he will give you some 5 lakh rupees. When you want to construct the wall, he will give another 5 lakh rupees. When you go for the lintel level, that is when you want to put your windows and all those things, lintel level, they call it as, they will give another 5 lakhs. When it comes to the ceiling level, that you want to put the ceiling for your house, you see that you are going to get another 5 lakh rupees. And at the end, during the plastering time, you will give another 5 lakh rupees. Like that, in a phased manner, the loan is going to be given for the house borrower, house loaning, who is going to construct the house. In the reverse mortgage case also, the same thing is going to work out. An elderly person, a senior citizen person, SCB we call it as, he will apply for the reverse mortgage loan, but he is not going to get the amount that is going to be given to him for how much he has. Say, for example, I require 10 lakh rupees for medical emergency or for purchasing the routine items that I require in my lifetime, or for the repair of the house. When you apply for 10 lakhs, the bank manager will give you some 2 lakh rupees at a point of time. And afterwards, he will give it in a phased manner. So under reverse mortgage loans, one can avail of the payments in combination of periodical lump sum or in the form of a committed credit line. The loan amount is dependent on the value of the house. So age of the borrower is also important. Interest rate, that is how much you are going to pay the interest for the bank, which is giving the reverse mortgage loan for you. That also matters, because you have to repay the principal amount what you are going to borrow on the reverse mortgage along with the interest amount that is being accumulated. So principal amount plus interest accumulated on that is to be taken into consideration, plus the life of the building, whether it is 20 years old, 15 years old, or 10 years old, or 25 years old. As the aging of the building advances, what the money that you are going to get in the form of the RML, reverse mortgage loan, is also going to decrease. The maximum permissible, it was 50,000 rupees. Now the total eligibility has gone to 15 lakhs. Now it is reaching crores together. So this is another important thing that we take into consideration. The next aspect that we touch upon here is we have the tenure, rate of interest, and repayment for the reverse mortgage scheme. How you are going to repay? The maximum tenure of such a loan is generally 20 years. So they will give you 20 years for you, during which you can borrow the money and you have to repay in the periodical terms, both principal as the interest amount you have to repay. Thereafter, even after youth, your death, your spouse can stay in the house till her is death. The rate of interest will vary with different lenders. If you approach private banks, they will apply some rate of interest. If you go for the public sector banks, they will follow certain rate of interest. But anyhow, they have to come under the Federal Bank of the America in American countries, and in Reserve Bank of India in case of India. So in case you want to discontinue with the loan, you can prepay. So you say, no, I don't want to take any loan. I don't want to bequeath the loan for my small younger children. So you are going to say, I will repay the loan asset. So you can repay in the middle also. But most of the time when you take the reverse mortgage loan, nobody is going to repay the loan because they want to lead a very comfortable life. So they go on taking the money on the base of the house that you have mortgaged with the banker. So there will not be any prepayment charges even when you go for the closure of the reverse mortgage loan and all those things. As there is no income stream for senior citizens after retirement, the reverse mortgage loan need not be serviced during the lifetime of the borrower and the spouse. You need not pay. Serviced means you need not pay any interest or principal amount. It will be accumulated. And when your son or the daughter wants to purchase back the house that you have given on RML, they have to repay along the full principal amount and also the interest portion also. In case the legal heirs do not come forward to redeem the property, then the bank will auction it in the newspaper and they will auction it in the world, in the public. Whatever the money that is due to the bank, they are to collect, and whatever the balance amount that they have to pay, that is going to be paid for the legal heir. So this is the case. So next we are going to study how does the reverse mortgage differ from a traditional mortgage. So in the traditional mortgage, what happens? You go and borrow the money on the base of the mortgage only, but mortgage, you understand, mortgage is only applicable for the immovable property, whereas the pledge is in case of the movable properties. For example, you can pledge the gold ornaments with the pawner. So pawner will, Marwadi, whom we call locally, they will give the loan for you on the base of the jewels or the gold that you have given to them. So you want to get back those particular thing released, then you have to repay the entire amount that you have borrowed, or you have to get back whatever the jewels that you require. So much money is to be paid by you. You cannot lose your home for not making the payments. Anybody who is going to give back their loan, that I do not want to have the house at all, I want to enjoy everything like that, or your legal heirs may come in the middle and may say that I am going to repay and I will get back my house, my father's house, or in the name of my mother whose house is there. I want to get back because I have got some sentimental value for them. There are no income requirements. They will not ask you what is your income and all those things. In the case of the housing loan, they will ask you, the bank manager will ask, come on, you have the site in Bangalore, you have the site in Mysore, you want to construct 30, 40 or 40, 60 or 4 cents, 6 cents in Bangalore or something like that. Then he will ask, what is the salary that you are doing? Only 40% you have to take home. Another 60% loan will be given to you, because compulsorily, as per the banking law, 40% of the total salary that you are taking, you should take to your home. And there are no credit requirements. They will not ask you that we are going to give more loan for you. Like that, they will not go to ask. So how it is going to work? You see there on the picture, there are two things. One is forward mortgage and another one is the reverse mortgage. In the forward mortgage, what happens? Equity will be there. Here also equity will be there. Your cash goes down as your equity goes up. So as your right in the property goes up, your equity is going to come down. So your cash, what you have to pay is going to be little, because you have to pay your increment, your value towards that particular equity is going to, because you are going to own that particular property. Whatever the loan that you have borrowed, it is going to be day by day or year by year, it is going to be less. But in the case of the reverse mortgage, what happens? Your equity comes down because you don't have the right on the property. On the otherwise, your cash balance is going to increase, because you ask, I want 15,000 rupees now. Next month you can ask 25,000. Next month you can ask 30,000 you require because of the medical emergency or something like that you are going to think about. Next important aspect that we touch upon here is how we are going to deal with the reverse mortgage. So you see, at the rate of 6%, $125,000 if you are going to obtain, and 50,000 being the case, you say $75,000 is going to be given, and you have to repay the interest. When you remove funds from our investment, we reduce the income from our investment. So when you remove the money from your investment, what happens? Your income is also going to decrease, because little you borrow in case of the reverse mortgage loan, your interest proportion that you have to pay on that will is also going to be lesser. Next, reverse mortgage review. Let us look at the statistics why reverse mortgage has become so important. You always retain the title to the home. So always what happens? Our title deed will be there. Most of you may be knowing, and you are all owning the house. You know what is called as title deed. Title deed is going to be given to you by the Mysore Urban Development Authority, MUDA, or it will be given by the BDA in case of Bangalore, or TUDA, Tumkur Urban Development Authority, as the case may be, or Hubli Dharwad Urban Development Authority. They will give the title deed. The title deed will ensure that you are the owner for that particular house. So in the case of the reverse mortgage review, what happens? You always retain the title to the home. The loan is HUD designed and FHA insured. So it is being designed properly, and you are going to repay the money. And funds from a reverse mortgage are non-taxable. So you see that whatever the money that you are going to pay, they will not ask you that you have to pay the tax or something like that. That is not allowed. Sell the home at any time with no prepayment penalty. So you can say, no, I do not want to repay the money. I'm going to sell my house. Then the banker will say, okay, you can sell the house and repay whatever the money that you have to pay for the banker. That includes both principal and the interest part. Money can be received in various ways and used for any purpose. You may say that I want 10,000 now, or next month you can say I want 20,000 rupees, or in the month of December you can say there is some medical operation is there for you and you want 1 lakh rupee. Then the banker is going to give it to you. So as the debt increases in the reverse mortgage property, your equity is going to come down. And when you borrow less and less, your equity in the reverse mortgage home is going to increase to a little extent. So no debt is ever passed to your estate. all retained equity is paid to your hire. So even if there is surplus amount after auctioning your property, reverse mortgage property, if the remaining amount is there, the banker will take back all the principal amount plus the interest accumulated, and he will repay whatever the money that is available to your legal successors. This is the case as to how the reverse mortgage. Then the question arises, who is eligible for a home equity conversion mortgage, that is a reverse mortgage? Homeowners, at least they should have 2 years age, because the reverse mortgage is given to you, a person who is not there in service, but not to the person who is in service, because when you are there in service, you will be getting salary. But when you retire, you don't have sufficient amount of income, because you may be getting around 20 drawing. Suppose if you are drawing 1 lakh rupee today, after retirement, hypothetically, you will be getting 25,000, 25% of that. And this you should keep in mind. After retirement, you will not be having any surplus money. Live in your home as your primary residence. As long you are going to borrow the RML, the banker will not ask you vacate the house, go out of the house, take some other house for rent purpose. No, he is not going to ask, because he says that you live happily as long as you live on this earth. Afterwards, whatever the remaining portion that is there, it is going to be enjoyed by your kith and kin, or the son or the daughter. So can I ever be forced out of my home? No, you are not going to be sent out of the home, because you are going to see that you are going to be there in that particular house forever. You will only be required to live in your home own, or keep the home adequately insured, and pay the property taxes, and you are going to maintain the property. So 4 things you have to keep always in mind. Even though you are borrowing the loan on the house where you are living there, you are not going to be sent off the house. You can stay back in that particular house only. Number 2, keep the home adequately insured. So insurance is must, because in America and European countries, insurance has taken a very good strength it has got. And even for the house also, you have to insure. Even when you go for, most of my friends, when they borrow the house, the Canara Bank or Punjab National Bank or the State Bank of India or whatever the bank you approach, they ask your house to be insured. That is one of the priority, and you have to fulfill that. And you have to pay the property taxes, whatever the property tax that will be due for every year, you have to pay that particular property tax. And number 4, you have to maintain the property also, because you have to maintain the property in good condition. That is also another important thing. So will the reverse mortgage affect my taxes or social security? No, not at all, because money received from a reverse mortgage is totally tax free. Nobody is going to ask you to pay the tax on the reverse mortgage, because whatever the money that you are going to borrow in the form of the reverse mortgage loan, it is going to be totally tax free. And the next one is, you see, how can I receive my money? Or what are the ways that you can receive the money from the banker in the case of the reverse mortgage loan? You can receive it in one lump sum, or you can receive it regularly, every monthly you are going to get, or growing line of credit will be there. They will arrange for a scheduled statement that you are going to borrow at this particular point of time, and a combination of the above, that is the lump sum plus the regular payments. That is also quite possible. Next, what are the different types of reverse mortgages? So we have the term reverse mortgages, we have got split term mortgages, we have got tenure reverse mortgages. Like that, we have got 3 important types. Let us look into what these particular types of reverse mortgages are going to speak about. Number 1 is term reverse mortgages. As the name itself is going to indicate, borrower receives monthly payments for a set period of time. So you are going to say 5 years I want money. So every month for 5 years you are going to get the money. The loan is repaid with interest at the end of the set term, unless he moves out or dies during the term. So repayment you have to make this. So the loan is going to be repaid with interest at the end of the set term, unless he moves out or dies during the, if that particular house owner is going to die in the middle, then that particular amount what you have borrowed from the bank is to be repaid along with the interest. That's why this type of reverse mortgage is called as a term reverse mortgage. The second one is the split reverse mortgage. What is this split reverse mortgage? Borrower receives monthly payments for a set term. You are going to receive for 5 years, 10 years, 15 years, as the case may be. The payments will stop at the end of the set term, and expiration of the term is not a contingency to repay the loan, as in the case of term reverse mortgage. The loan has to be repaid when the homeowner dies or moves or sells the home. So here also what you say, the payment stops at the end of the set term. So you are going to borrow for 5 years. Your payment in the form of the reverse mortgage loan will end at the 60th month, and expiration of the term is not a contingency to repay the loan. So you may pay for 5 years, 10 years you might have taken. But if you have got enough cash with you, you can repay the reverse mortgage loan that you have borrowed. The loan has to be repaid when the homeowner dies or moves or sells the home. That is also possible. Next, tenure reverse mortgage is there. What is the tenure reverse mortgage? Line of credit reverse mortgage offers borrowers access to a source of money they can use whenever they choose. So it is left to you how much you want to borrow and all those things. You can go and meet the bank manager and you can demand for whatever the money that you want to get in the form of the reverse mortgage. So this is called as tenure. The principal limit is approved based on the borrower's home value, age of the borrower, and the origination fee and percentage of shared appreciation the tender is entitled to. The entire line of credit may be advanced at closing. So this is also going to be taken into consideration. The next is the way how the things are going to work out, the procedural aspects relating to term reverse mortgage, tenure reverse mortgage, and split term reverse mortgage. So first one, let us look into the term reverse mortgage. What is the entire total description relating to the reverse mortgage loan? Borrower receives monthly payments for a set period of time. The loan is repaid with interest at the end of the set term unless he moves out or dies during the term. Unless you move out of the house or the death of the owner is going to take place, the person is going to be there in that particular home only. Second one is the split term. In the split term, what happens? Borrower receives monthly payments for a set term. The payments will stop at the end of the set term. Expiration of the term is not a contingency to repay the loan, as in the case of the term reverse mortgages. The loan has to be repaid when the homeowner dies or moves or sells the home. So when you want to sell the house, when you want to move out of the house, or when the owner of the house is going to die, all the money that you have borrowed in the form of the reverse mortgage loan is to be repaid. The next one is the tenure. Borrower receives monthly payments as long as he lives in the house. Loan has to be repaid on death of borrower or on his move out. So you are going to see that in the case of the tenure reverse mortgage loan, borrower is going to receive the monthly payments as long as he is going to live in the house. Next, we look into what are the line of credit, how you are going to work out the procedural aspects. Line of credit reverse mortgage offers borrowers access to a source of money they can use whenever and however they are going to use. The principal limit is approved based on the borrower's home value, age of the borrower, origination fee, and percentage of shared appreciation the lender is entitled to. The entire line of credit may be advanced at closing. So you can repay whatever the money that you have borrowed at the end of you want to close down the accounts. Another one is the hybrid term or the tenure term, what we call it as. In this particular case, hybrid term or tenure reverse mortgage combines the features of term or tenure plan and line of credit plan. It allows the borrower to set aside part of the principal limit at origination to establish a line of credit. The borrower receives the rest of the principal limit in the form of equal monthly payments as long as the term does not expire or the borrower lives in the home. So you see the borrower is going to receive the rest of the principal limit, whatever that you have not borrowed, and also the whatever the interest portion that you are to receive. The next important thing that we look into is the another item, that is the lifetime. The description: borrower receives monthly payments as long as he is alive, even if he is not staying in the mortgaged house. The contingency to repay occurs on the death of the borrower. An annuity attached to this reverse mortgage enables income to be provided for life. So you are going to borrow the money on the basis of the reverse mortgage, At the same time, you open at some account where you are going to contribute something for the account of each and every bank, and you are going to be entitled for that. The next one is the roll-up, a lifetime reverse mortgage offered in UK with an added feature of lending additional cash advance to the borrower in for higher loan interest rate. So you are going to see that is a reverse mortgage offered in the United Kingdom, Great Britain, with an added feature of lending additional cash advance to the borrower in return for the higher loan interest rate. You want more and more money, then you have to see that you are going to get the loan at a higher rate of interest. That is, reverse mortgage loan interest is going to be very high. Next one, we have got fixed payment loans. The borrower gets cash in lump sum instead of being charged interest on the loan. The borrower agrees that when house is sold, he will pay the lender a higher sum than the amount borrowed. So here, as the agreement is going to say, you are not going to repay it during the period of the time when you are going to be there. You say that I want to sell my house. When the house is sold, I am going to give back all your principal and the interest rate, though the interest rate is going to be somewhat higher, it may be. That is called as fixed payment loan. The shared appreciation mortgage is going to be there. In the case of the shared appreciation mortgage, borrower agrees with the lender that they can have a share in any increase in the value of the borrower house when it is sold. Here the interest rate may be very less, or it may be very nothing also. So you see here the interest rate is going to be very less because you are going to share that with the increased value of the borrower's house. Next, we are going to look into what is forward versus reverse mortgage. Two types of mortgages we are going to look into: forward reverse mortgage and the reverse mortgage. So what is forward mortgage? You are going to see in the case of the forward mortgage, purpose is to purchase a home. Whenever you want to purchase a house or a home, you usually go for the loan, that amount that you want to receive. So you apply for the loan amount because you want to purchase a house in the case of the forward mortgage. In the case of the reverse mortgage, what to do? Whatever the house that is being constructed already by you, whatever the house that you have already purchased, you want to give it back to the bank and you want to get the income for your life where you can lead the life in a very normal way, in a very luxurious and in a comfortable way. And borrower needs income to qualify. So the second important thing is borrower population is in this general population. In the case of the home, whenever you want to purchase, your population is going to be general population. I can also apply. You all people can also apply because you want to purchase the house. In the case of the reverse mortgage, what happens? Instead of you borrowing, you see that you happens to be a one person in the society who wants to get back whatever the income that is there, what is the value of the house, you want to enjoy that particular house. That's why they say borrower population consists of aging seniors with equity in their houses. Next one is borrower needs income to qualify. So here a borrower is going to borrow the limit of the loan that is being given to him because he has to get qualified, because Income Tax Act is going to provide the concession and the exemption for you. No income qualification is necessary in the case of the reverse mortgage. Why? Because already you are retired. Who will come and ask you what is your income and what is your salary and all those things? They will ask you, give the pensioners slip or something like that. That is enough because they want to give you very low. And you as a pensioner also, you do not want to take more risk. Whatever the money that you require, you are going to just borrow from the banker. Before closing, borrower has no equity in the home. At closing, borrower's equity is very less. So when you are going to purchase the house, what happens? Your equity is going to be more because you become the soon you purchase the house. But afterwards, what happens? Borrower's equity is going to be less because you are going to borrow the loan on the property that you have purchased. So as borrower has substantial equity in the house at the closing. So at the closing, what happens? You are going to have a substantial income. During the loan term, borrower makes monthly loan payments, and as a result, loan balance reduces. Suppose if you have borrowed 8 lakhs, 10 lakhs, and you are going to repay the money immediately, your balance in the account, how much you have to repay in the form of the housing loan, it will get reduced. During the loan term, borrower receives monthly payments from the lender and as such loan balance increases. So what happens? Loan balance is going to increase because you go on borrowing on the house that you have purchased, and that will serve as a security, and the banker will also give the money for you because there is no restriction. In the case of the forward mortgage, at the end of the loan term, borrower's liability is zero because at the end, what happens? You repay all the housing loan. But in the reverse mortgage, what happens? It is reverse. Your liability is going to be much more high because you are go on, you went on borrowing the money from the banker, and so your liability is going to increase like anything. Borrower's equity increases over time. Loan balance decreases as payments are made to the lender on debt and rising equity transactions. So what happens in the case of the reverse mortgage loan? Your equity is going to increase over the time period. You more the amount that you are going to borrow, more is the liability for you. So falling debt and rising equity in the case of the forward, your loan will become 0, 0, 0, but your equity will increase like anything because you are the owner of that particular house. Borrower's equity decreases over time. The loan balance rises as loan advances are made to the borrower. Interest is added to the outstanding loan balance, and no repayments are made, rising debt, equity transactions. So in the case of the reverse mortgage, what happens? You are going to borrow as much you want, and your equity in the house is going to be very, very, very less because you have borrowed. What you have borrowed? You have borrowed in the form of the loan that is going to be required. You want 10 lakh rupees, okay, you can take. You want 12 lakh rupees, that also, it is also possible. Borrowers have more incentive to make capital investments to maintain the house. So in the case of the house owner, more you spend, the house is going to be that much worth. You don't want to spend any money for the interior decoration, woodwork, plywood work, wardrobe, and having the sofa set, dining table set, and all those things. It will ask for your more investment. But in the case of the reverse mortgage, what happens? You are going to show a very less incentive to make capital investment. Why? Because already you are aged. You do not want to give a very high infrastructure facility for that particular house where you are going to see that you are going to showcase the luxury that you are going to enjoy because nobody wants to show off their luxury, isn't it? Industrialist, big businessman, they do not want to show off their luxury. Then how they will make some arrangement as to how the things are to be done. The borrower makes repayment of the loan in the case of the normal reverse mortgage, and no need to make repayment of the loan and death or move out or sale of the property because you need not worry about the death. Then some other person will take care of. When you want to move out, the banker will not ask you to move from the house at all or settle sale of the property. You want to sell away the property, then also the banker will say, we will say sell it and we will get the things. Then risk in reverse mortgage. What are the risks that are being involved in the reverse mortgages? Number one, guarantee in reverse mortgage. Most of the things today we are going to have high risk in the business because the profit will accumulate for an entrepreneur only when he is going to take the high risk. If the borrower do not wants to take high risk, then he is not going to enjoy the high investment. Guarantee in reverse mortgages, how it is possible? One of the major product innovation in the insurance space during last decade is introduction of guarantee with life and annuity contracts with markets have been witnessing significantly growth of both demand and supply of this guarantee. Each type of guarantee has an associated benefit to the policy owner and a risk to the provider. We can take an analogy of the innovation and interpret the unique features of reverse mortgage as a bundle of the guarantees as detailed in table below. So what that particular table is going to tell us, we take into consideration. Number one, tenancy, we say. So when you say tenancy, you have that particular thing. House owner can stay in the house as long as he wishes. So second one is income guarantee because every month the banker is going to repay 10,000, 15,000 for you from the corpus that you have got. For example, 15 lakhs, 20 lakhs, something like that. The third one is the repayment guarantee. What is repayment guarantee? Whatever the loan that you have owed, it is 100% secured because the banker will not allow that to the public sector banks. They will send the notice for you even if you don't pay or you have to pay 10 rupees less. Even if you want to pay 10 rupees for them, immediately they are going to collect. No loan repayment obligation to the owner as long as he lives in the house. So as long as you are going to stay on this work, even if you have become an old man, you can lead in your life and you need not pay any tax to the government assets because you have availed the tax now. Under the section Income Tax Act, you are going to enjoy the interest portion of the money that you have spent, and also you are going to enjoy the what we say the principal money that you are going to repay. Non-recourse guarantee is also going to be there. The lenders cannot accept any assets of the borrowers other than the mortgaged house for repayment of loan, and repayment amount would not exceed the value of the house at the time of repayment. So at the time of the house which is being sold, suppose if the house is goes for 50 lakh rupees, all 50 lakh rupees you are not supposed to give it in the form of the reverse mortgage. You can go up to 60%, 65% of 50 lakhs. 65% of 50 lakhs, 2 lakhs you can go up to. Afterwards, whatever the money that you have paid, that particular thing is to be taken well care of by the by individual owners of that particular outlet, or the Garuda Mall, or the Easy Day, or the big store, or metro, whatever the thing that you want to call. Minutes cannot access any assets of the borrowers that other than the mortgaged house for repayment of loan, and repayment amount would not exceed the value of the house at the time of the repayment. So it should not exceed the value of the house at the end. So you have to repay it with lot of guarantee. So what are the things that are going to be there in the next things we are going to take into consideration? Risk in the reverse mortgage. What type of risk is going to be there in the reverse mortgage? It is a known risk, but at the same time, systematic risk, because you estimate how much you are paying for the 30-40 building. You may be paying 1 crore rupee. When 1 crore is going to be divided by the remaining portion of the service that you have got in age, plus what is the amount that you are going to pay. So as long as you are going to purchase the loan after 45 or 50 years, the rate of interest is going to be high. Keep the rate of interest on the one side. You are going to get more loan, but you find it very difficult after the retirement to pay off the loan assets. So the description runs as follows. Risk of loan value exceeding the value, house value, is called crossover risk. This is a function of occupancy risk, mobility risk, mortality risk, interest rate risk, and human appreciation risk. So the general methods that we take into consideration: conservatism in deterministic factors like interest rate, appreciation, rate, etc. Other methods include charging shared appreciation fee, variable interest rates, diversification, demographic and types of property such as independent house, flats, and villas will enable control for general or specific how appreciation risk is going to be there. So you have to take care of those things. Next, longevity risk. So risk of borrower living longer than expected. Risk of borrower is going to be much more. Charge the premium for non-aggregately longevity risk. Hedge the aggregate longevity risk using mortality-based securities and survivor-based bonds appropriate. So you can collect it or make good with the bonds and other things that you are going to issue. And the next one is the absenteeism. So you see anti-selection is going to be there. Silk of house value, risk of house value being covered by intermediaries or borrowers. So they will cover the whatever the risk of house value that is going to be covered, it is going to be done. The risk can be controlled during a standardized and uniform processes for valuation of houses, constantly improve with attached trends, life stable, laws and regulations and suggestions more request that the government can come up to regulate the market. So there is a lot of problems, a lot of problems are there, especially in the government sector. Housing loan, when you say the company has to come forward, the government has to come forward to see whatever the problem that is there between the realty owners and the owners of the house, villas and other things. The next we take into consideration the longevity risk, that is we call it as ನೋಡಪ್ಪ ಇದೇನ ಪಟ್ಟಿಂಗ್ ಆಯ್ತಲ್ಲ ಇದು ಚೆಕ್ ಮಾಡಿ 5th 25th ಆದರೆ ಗೊತ್ತಾ ಇಲ್ಲ ಶೇರ್ ಆಗ್ಬೇಕಿಲ್ಲ ಇದು 25th ಶೇರ್ ಮಾಡಿ ಕ್ಲಿಕ್ ಮಾಡೋದ್ರ ಮೇಲೆ ಬಂತಾ ನೋಡಿ ಕ್ಲಿಕ್ ಮಾಡಿ ನೆಕ್ಸ್ಟ್ 26th ಹೋಗು 26th ಅದಾಗಿದೆ yes okay the next one is the 20 moral hazard. You see risk of borrower's improper or negligent maintenance of property and risk of borrower not taking home insurance or not renewing house insurance in time and not paying property taxes. So you take into consideration these particular issues where you say that you have to repay the property tax. If you don't pay the property taxes in time, it is going to accumulate because the people who are living in Bangalore, Mysore, 2 months time will be given for you. April 1st up to 31st May, you are supposed to pay the property taxes with 5% discount. The municipal corporation will allow you to pay 5% less than the corporate tax, the property tax. For example, you have to pay 9,500. In case you have to pay 10,000 rupees for the property tax, 5% rebate will be given. But when it is going to be much more, you see that you have to take into consideration that the property tax will be added up to the extent of 25%. So 10,000, 2,500 extra, 12,500 you are supposed to pay. Risk control measures like an audit by lender or a procedure to periodically verify the property and the insurance, tax documents, renewal of insurance can be done by lenders by charging the amount to the loan value. So punitive measures built in the product may also force proper maintenance of property. So you have to take into consideration these things. Punitive measures means they are going to ask you to say that you have to pay the penalty and all those things if you don't maintain the property well. And the last one is the litigation. Whatever the reverse mortgage loans that you are getting, that will be given in good confidence with you that there is no litigation relating to the RML property that is being mortgaged. But if there is any litigation on the property which you have acquired and on which you have taken the reverse mortgage loan, everything should be good, done properly, and the thing has to be taken into consideration by the owner of the house. That is risk of litigations with heirs during loan repayment or in handing over the property to lender. More careful contractual procedures at the inception will enable minimize the litigation expenses to lender. The next one is risk inherent in the reverse mortgage product. So a reverse mortgage is a product like you have got a demand draft, isn't it? Demand draft is a banking product. Loan is a banking product. Or your advances is a banking product. Or you are going to take a gold loan, that is a banking product. You are going to take the personal loan, that is a banking product. So banks are there for the purpose of benefiting the society through the guidelines that are being issued through the Reserve Bank of India or any other central bank in any part of the country. So what are the risks that is going to be there? Say, for example, you are going to keep 1 lakh rupee as fixed deposit in the State Bank of India. For the senior citizens, State Bank of India is going to pay you 6% fixed interest rate. So for 1 lakh rupee, you are going to get 6,000 rupees as the interest. If you keep 10 lakh, you are going to get 60,000 rupees. So how much it will work out? It will work out to 6%. For example, if you want to get more fixed interest rate, you take that money that you have kept in the SBI, invest in some private people where they are going to give you more amount of the dividends or the interest as the. Are you going to do like that? No, because we take into consideration liquidity, profitability, and what is that? Another one, 3 important structure on which the banking economy, banking structure is being built. Number 1 is liquidity, number 2 is profitability, and number 3 is safety. Safety is taken into consideration because we have to give a lot of importance for the safety of the money that we have given. If there is no safety, nobody will come forward. For example, if it is a private cheat funds, you don't make investment of so much of money because you see that the risk is going to be too much. Any financial product involves some risk and reverse mortgage is no exception. The lender faces many types of risk for this product. Some of these risks are, number 1, longevity risk. What is that longevity risk? the lender has to provide the payment upfront, either lump sum or installment. So suppose if you take a hypothetical example, Mr. X retired after 60 years. So in the 61st year, he is going to avail the RML. So from reverse mortgage loan, in the 61st year, the bank has to take the risk because it has to go on giving the money every month to Mr. X. And the Mr. X will be living for 80 years, let us think of. Then till the 20 years, the bank will not be having any right to ask that particular person, you come on, from the last 20 years, you are receiving the monthly equated money from the bank, you repay that. No, bank cannot ask for the repayment of the amount that is being given in the form of the reverse mortgage loan. Why? Because reverse mortgage loan is given for the any particular applicant, any particular borrower, only to see that his life is going to be happy, comfortable life, that he is going to lead a very painful or a miserable life. And as we are aware that the life expectancy of people is increasing, the risk of late recovery of loans is a big risk for the lenders. So whenever you see that you borrow the money, it is going to be very happy for you. But when you want to repay the loan, it becomes very difficult for you, because you will be searching here and there in all pockets where you can get the money and you want to repay the money. There is a Kannada Tripadi that is being told by Sarvagna. What that particular, only in 3 lines, Sarvagna has told the entire story relating to the loans that we are going to borrow in our public life. Salavanu ಕೊಂಬಾಗ ಆಲೊಗರ ಉಂಡಂತೆ, ಸಾಲಿಗನು ಬಂದೆಳೆವಾಗ ಕಿಬ್ಬದಿಯ ಕೀಲು ಮುರಿದಂತೆ ಸರ್ವಜ್ಞ. That means to say, you can easily understand, whenever you are receiving the money from another part, it is very easy for you to receive. But when you have to repay for them, it becomes very difficult. That is the summary of that particular 3 lines that I told now. The risk is aggravated by the fact that with the payments from reverse mortgage, the lifestyle of the borrower gets better, which may become one of the contribution in the improvement of longevity. So somewhere you see in the middle or in the interior period, say after some 65th year, from the last 5 years you are borrowing, no, 61st you started, now you are in 65th year. At that time, if you get some lottery, let us say, lottery amount you are going to get, or your son has given some total sum of 10 lakh rupees for you, immediately that 10 lakh rupees can be repaid to the bank, and your equity is going to increase in the house, and your cash balance is going to be coming down as such. So interest rate risk will be there. Always, whenever you are going to borrow the money, nobody will give the money to you interest free. Any banks will give it to you interest free? No, no bank is going to provide you on interest free basis. Why? Because either they have to get the subsidy from the bank, or they have to get the interest from the borrowers. Then only banker can survive. Who is after all a banker? A banker is a person who deals with debit and credit, that's all. A banker is a person who deals with debit and credit. Debit, credit. Debit the receiver, credit the giver, we are going to say, isn't it? We apply the rules. That is the very simple analogy that we are going to apply. Interest risk free is not going to be made, because you have to pay the interest on whatever the loan that you have borrowed. But the government will say, because you are a senior citizen, the rate of interest is going to be very, very nominal. Say, for example, in America, they may charge 5% for you. In India, they may charge 7% for you. That's all the difference, but you have to pay the interest. Next, market risk, property value risk will be there. Your property is always subject to the market risk, because rate of the real estate will go up like anything in the market, or it will come down like anything. For example, you see a great economy, which is being considered as the big brother of the entire world, United States of America, experienced a great recession in 2008. Lehman Brothers, they went on giving the loan for the real estate business. Then they find it very difficult to repay whatever the loan that they have borrowed. How long you can go on servicing the real estate business. There is some maturity, no? Everything has got a limit. Beyond that, you should not go. When you go beyond the limit, then you are going to see that you are going to be put into tussle and you have to save yourself. Then whatever the problem that was there in America, it had its effect in all other countries, because most of the countries, they invested their money in the American stock market. When America itself is in trouble, then the other countries' economies are going to be also be put into doldrums. They are going to be under a lot of trouble. You can see India was not too much affected because of the 2008 recession that took place in United States of America. You know why? Because our banking foundation is very, very strong. The bank manager for a government employee, I am telling you, I once again tell you, government employee, the banker will not give the loan as per the whims and fancy. If I go and ask, sir, I am working as a professor, give me some 1 crore loan, the banker will say no. Why the banker will say no for me? Because I have got only less than 12 years of experience. I have got 12 years of service, that's all left over. With 12 years of service that is being left out, how can you repay? He will ask, come on, Mr. X, how can you repay? You have got any other source? I will say, no, I don't have any other source except the salary. Then the banker will say, I'm going to calculate and I will give you just 50 lakh rupees. So for how much loan you applied? 1 CR, but you are going to get a loan of only 50 lakhs. Why this is? Because in India, the banking laws, banking rules and regulations are very, very strict. They will not give like that. It is very, very difficult unless you are going to bribe some people, unless there is some corruption, you don't get any extra money from the banker side, because bankers are also audited. The auditor will ask, how can you give the loan for that particular person, Mr. X, when he has got only less than 12 years of service? How can you give 75 lakhs? The calculation will not come to it. So the banker is going to be under trouble. So the lender is in a reverse mortgage, can claim back his loan only from the property on which the loan has been granted. He does not have recourse to any other asset of the borrower. If the sales proceeds of the home are not sufficient, the lender cannot claim the balance from the hires of the borrower. So is it possible? On whatever the loan that you have given, the RML asset, you have to repay that particular money within the time period. If you have got the minus figure regarding this one, they will say that it is not at all possible, because the minus figure cannot be adjusted from the other part of your hires or your legal successors. This gives rise to the risk of adverse movement in property market, which affects the profitability of the product. So though this risk can be diversified with increasing the geographical reach of the operations of the lender, but the risk still remains. So market risk is always going to be there. One should be aware of when he is going to give the loan for the borrower. Last one is the early redemption risk. Some of the reverse mortgage loans may give the borrower an option to repay the loan at any point of time. That's what I was telling you. At the rate of 61st, if you borrow, at the age of 65th, your daughter or your son-in-law or your son gives a lump sum money for you. Take daddy, clear off the loan that you have taken from the reverse mortgage loan. If he gives you 25 lakhs, immediately the 25 lakhs you can repay to the bank, and your equity in the RML is going to increase and your cash balance is going to come down. And another important thing is, you see that early redemption, as the borrower will pay back the loan when it is more beneficial to him, which in most cases does not coincide with the interest of the lender. In case the lender has securitized the loan, which in most of the cases it is, the risk becomes higher as the lender cannot close its position in this case. It is not possible for you to mitigate the loan risk that is going to be there. Adverse selection and moral hazard risk is going to be there. As with insurance products, reverse mortgage products also have the scope of adverse selection. That is, only people with expected higher longevity may go for such products. Also, as the borrower has really no incentive for keeping the house in proper condition, as the risk is borne by the lender, it will lead to depreciation of value of the property. So always you have to keep, when it is our own house, we see that we will get it whitewashed, painted, and we see that the house is being constructed like a palace. And that particular palace house is going to be kept like a palace only. Not even a small drop of dirtiness is going to be there inside the house. But outside, when you see lot of problems are going to be there when you don't maintain the property in the proper manner, because you have to whitewash, you have to paint the house, interior design of the house is to be maintained properly, and whatever the items that you have got inside the house, that is should also be taken. Today you see T type buildings, that is government type. For example, Muda will construct so many houses which are in T type. T type houses don't have any value at all. You go to EWS house, economically weaker section house in Kuvempu Nagar. You go to some other small areas in Bangalore where the rate is not so much. If you go to Sargata main road or MS Palya or some other place, Ennur, you see the rate of the house is very less. But you come to the city area, Vijayanagara, Chandra layout, Basveshwar Nagar, you see the rate of the houses have gone like anything. Because you see that it is not possible for you to accommodate all these things, and you have to take into consideration these particular issues, and you have to maintain the property. Why reverse mortgage has failed to take off in India? So when I read the entire thing, in nutshell, I can summarize that one. Why reverse mortgage is in high speed in America and in Europe country, but in India, it is reverse. Why? Because most of the Indians, they are sentimental. They are very much attached to their son or the daughter. They say, look, I'm going to give you a house in the form of a gift for you. You can enjoy for your granddaughter, grandson. You are going to say, I'm going to give you so much of assets for you, which you have to enjoy. Then where is the question of your enjoyment? Because you are giving it to somebody else, so you can't enjoy it. So the idea behind the reverse mortgage loan is you have to lead the life in a very comfortable manner, not that luxurious. I'm not using the word luxury, I'm using the word comfort. You have to lead the life in a comfortable manner. You should not come across any unforeseen scene in the form of you are leading a pitiable life, you are leading a very difficult life. No, it should not come up. Despite having so many advantages and global acceptability, reverse mortgage has not managed to captivate the Indian market because of the following multiple reasons. Number one is it is a predominant tendency for Indians to treat owned property as an important family asset. ಏ ಮನೆ ಇರ್ಬೇಕಪ್ಪ ನಮ್ಗೆ ಲಕ್ಷ್ಮಿ ಇದ್ದಂಗೆ, ನಾವು ಸಾಲ ತಗೋಬಾರ್ದು ಅದ್ರ ಮೇಲೆ, ಮನೆ ನಾವು ಇರೋ ವಾಸ ಇರೋ ಮನೆ ಮೇಲೆ ಸಾಲ ತಗೋಬಾರ್ದ್ರಿ ಅಂತ ಹೇಳ್ತಾರೆ. Why? Because most of the people consider the house where they are living as goddess Lakshmi. So they don't want to take the loan on that particular house. This asset is usually intended to be inherited by the next generation and would be liquidated only as a last resource. The second one, the elderly tend to hold a place of importance in Indian culture. Whatever our elderly people, our daddy, our grandmother, our mother, or our grand nanny, whatever they say, we listen to their words with lot of calmness, and we adhere and give respect for their words, and we do not want to take the loans on those particular assets. So property owning senior citizens are generally assured of care and support in their golden years. So you see, I'm giving this house for you because you have to take care of me when I'm going to be a senior citizen, when I'm age old, when I can't walk, when I can't take so much of risk in my life. You have to take care of me. Say, this is the house that I'm going to give it to you. You can inherit it. This is the procedure. They do not want to take any loan on the house where they are living. Property ownership in India is considered as an inheritable subset, which is ideally handed over to the legal heirs. Also, the owned property is considered for trade unless there is a substantial benefit or imperative financial crisis of owner. So unless I'm going to be put into a lot of trouble, total loss is there for me. then only I can think of this particular line. Otherwise, I will not think on this particular aspect. Another point to note is that in reverse mortgage, the loan amount is capped at rupees 50 lakh to 1 crore by the lender. Therefore, availing the same in key metro cities where property prices usually range from 1.5 to 3 crore is less lucrative for the borrower. So in the Bangalore area, Majestic area, you can see per square feet of the land is going to cost you 50,000, 30,000, 40,000 as the case may be. Even in the outskirts like Banshankari, Jayanagar 4th block, 9th block, JP Nagar, Vijayanagar, Chandra layout, Nagarbavi, you can see the property prices have gone up like anything. Now, what was the price that was there in 2004? A 30-40 site was available for you for 4 lakh rupees in Mysore. But the same 30-40 site, if you want to purchase now in Siddhartha layout or in Vijayanagara 4th stage, you have to pay not less than 1 CR, 90 lakhs, 1 CR they are going to say. It's very easy for them to tell CR. They say it is CR, sir, now it is not in lakhs. Therefore, availing the loan in the Majestic or in the city area, in metropolitan cities, Bombay, Delhi, Chennai, Kolkata, Bangalore, metropolitan cities, it is very high because the property rights have gone up like anything. There was no lifetime income which most retirees search for in any fixed income avenue. Whatever the money that you have saved in the form of the insurance, whatever the money that you have saved in the form of the PP, whatever the money that you have saved in the form of KGID, whatever the money that you have saved in the form of mutual funds, those things will come to your help when you retire. So you receive so much of policy money, no, that will help you. The liability of repaying the loan was set to arise as the term gets over. So if someone lives a term, one runs a risk of losing the house if one is not able to repay the loan. So when you are borrowing, you have to be very, very careful. You have to be extremely careful. You have to think 10 times whether the loan that I am borrowing from the bank, I am in a position to repay along with the interest. If you don't have that particular confidence of repaying the loan along with the interest, then it is not at all possible for you to borrow. So there should be good source of money left with you so that you are going to see that you are going to enjoy and you can repay the principal amount what you are going to borrow in the form of the RML with the interest. Another thing is that the most Indians have erroneous perceptions about reverse mortgage as the product itself is not at all understood in India as traditional home loans are. The fault probably lies with the banks who should be trying to educate their clients on what reverse mortgage does and does not mean. So the banks have to give a lot of advertisements in both public sector as well as private sector. In 2007 only, when uh, um, we see Chidambaram was the finance minister at that time. He passed a bill in Lok Sabha that we are going to allow the Punjab National Bank to go for uh, uh, the reverse mortgage loan, which is being considered as big bond scheme. So like that in SBI also went for the reverse mortgage loan and all other banks followed the State Bank of India and the Punjab National Bank. So this is all in total what I wanted to tell for you relating to the housing. So as housing, you know, that is the very important need. Most of the people in India, we are facing shortage of housing loans in India. Housing loans are being provided only on the basis of the security. It is very easy for the housing loans for the government sector employees. Think about your people. You are all attending the refresher course. You are all permanent staff and you are getting the salary from the aided institution and in the government sector. So it is very easy for you to get the housing loan. Think about a businessman or a other small trader. It becomes highly difficult for him to get the housing loan. So these pictures, what I have given for you, it is going to tell you that the housing loan is a very, very macroeconomic activity which is going to allow huge amount of the business that has to come down. Because if you start yourself investing in the house, you are going to give employment for so many people. You are giving employment for the planners, engineers, you are giving employment for the contractors, you are giving employment for the coolie people, you are giving employment for the plumbers, electricians, hardware, and other interior decorators, architect people, mosaic person, marble layers, all variety of the people are going to be covered. So whatever the amount that you are going to spend, all the people are going to get the employment. But in a country like ours, because of the population that we have got, huge population like 130 crores, all the 130 crores people don't have the makan, they don't have the shelter. So you see, you are going to see that you are going to give rise for 250 industries which are going to manufacture. Even a small nail is required, even a small paint that you require for your house is to be manufactured in the industry, and you are giving an opportunity for them to manufacture for you. Housing industry from the last 5 years, you have seen that it has grown in terms of 3% in physical terms, and in financial terms it has grown 30%, and percentage of mortgage debt to GDP is 8.50%, and China, in India it is very 8.0, whereas in China it is 12%, in Malaysia it is 22%, in Hong Kong is 40%, and in US it is 65%. You can just see that how much people are borrowing. The borrowing rate itself is very less in our country. You look at the next picture, housing finance market, which I am giving. This is at the macro level. Who are all the players in the housing loan? So household people, corporation, trust, provident funds, they all are going to borrow from these particular different sources. Like we have got primary, we have got secondary, housing finance corporation, housing development corporations, and we have got the government of India, we have got the state banks, we have got the external sources from where we are going to borrow, and we are going to see that the National Housing Corporation of India is going to provide the loans for us. And today we are going to see the reverse mortgage loan. When you are in the age bracket of 60 to 65, are going to get 40% of the house value in the form of the RML loan. If your age is 66 to 70, you get more 50%. If your age is more 75, you are going to get 60%. And if your age is more than 75%, you are going to get 70% of the total assessed value. So this is going to speak you, as your age advances, the loan that you are going to get on the reverse mortgage loan is going to be higher. So RML in India, in June 5th, 2007, ICICI, Bank of Baroda, and LIC Housing Finance Limited has also started and ventured into RML, and Union Bank of India is also going to launch, and operational guidelines have been issued by the National Housing Corporations to primary lending institutions. And on October 12, 2007, State Bank of India announced the RML that it is going to issue, and November 1st, 2007, the RML scheme. The global scenario I am going to, but is not taken its what the speediness that it has